Hello, everyone, and welcome back to another exclusive Boom Room interview. This is Sasha with Arcanum Ventures. I'm here with my good friend and colleague, Carmelo. And
Hello,
today we
hello.
are discussing all things rollups, L2s and L3s. We're here with the CEO and co-founder of Caldera, Matthew Katz. Matt, how are you?
I'm great. Thanks so much for having me on.
It's a pleasure to have you on. It's been a while. The funny thing is we this is the first time we've met. Which is interesting because we've been kind of working with Caldera for a little while now, exclusively on node sales. You guys, this is like an area of interest for you guys because Caldera is considered like a roll up as a service. But it's a pleasure to meet you. And before we dive into all this really fun stuff, I would like to start this interview the way that we start all of our interviews with our guests, which is asking more about yourself, your personal experience. Who is Matt Katz? How did you get into crypto? And what is this driving vision that led you towards the founding of Caldera?
Yeah, definitely. I'm always lucky, because whatever you do in crypto, right? This is the question people ask. I actually do have like a good, interesting kind of intro to crypto story. In some respects, I'm like a crypto OG. I first got into Bitcoin, like I bought my first Bitcoin when it was, you know, on the order of like hundreds of dollars. This was back in like 2011, 2012. I was, 12 years old at the time. Literally, bought tokens when like the first like Bitcoin ATM opened up in my hometown, and then kind of went through that entire kind of cycle of speculation at the time, right? So that was immediately kind of pre Mount Gox. I think Bitcoin hit about $1,000 per coin. Mount Gox happened, right, which is like sort of FTX on steroids, at least from a market share perspective,
Yeah,
right?
yeah.
And then from that kind of rage quit the space, and then I came back sort of like every cycle since. Even though I kind of was in and out of crypto at the time throughout high school and then college, got really into software development. Did a bunch of stuff in high school. Really focused on building more kind of like practical applications, right? So like full stack development. Did some open source work, building like open source tools for like small kind of microfinance institutions in like India and Africa, et cetera, that they would use to basically start up like these really small like local banks. Um, and then yeah, a bunch of hackathons all throughout college and high school. Got back into crypto now on the kind of like developer and system side, partially from just the curriculum at Stanford where I did my undergrad. Got the chance to basically learn from some folks like Dan Bonet and David Maziere who have been very active in the crypto space. And then also, got connected to a bunch of really great builders, build it like really kind of pushing the forefront of what applications could do on chain at the time. Things
Mm.
like fully on chain games, on chain social, etc. And then, hopefully from that, it's kind of obvious being in those crowds, like and seeing, the limitations that people were running up against, why we decided to start Caldera, right? We just realized that, at least in the Ethereum context, like horizontal scaling and via rollups was necessary in order to really like let applications exist in the space. And so, based on that insight, and again, just the momentum behind rollups, et cetera, we founded Caldera in like early 2022.
Mm. That's
Uh,
fantastic.
how I wanted to ask too, because I must admit I watched like one of your interviews before, and I heard you got in. You are an OG, and you got in very early. But how did you come across Bitcoin as like a 11 or 12 year old? When I was a 12 year old, I was a complete moron. So I can't imagine uh, knowing or understanding what a cryptocurrency was at that age, and choosing to invest in it. So like, how did? Can you dive a little bit deeper into that also?
Yeah. So I um I think at least my first intro to Bitcoin I think was literally like random. Like I think it was like Mount Gox. I clicked on a link, took me to Mount Gox, and then kind of fell down the rabbit hole. At the time, like Bitcoin Talk was like the big social hub, and so just spent a lot of time there. But at that age, I was like, they kind of call these kids like script kiddies, right? Like going around random like sort of gray hat hacking forums,
Mm,
running scripts, just doing a lot of stuff like online, and then being in those sorts of communities. Of course, all these like old like bulletin board right forums. You eventually find your way to Bitcoin if
yeah.
you're spending like 12 hours a day on those types of sites at the time. Um, so uh, so yeah, that's generally how I got into it at the time, and always had an interest in kind of computer science, and so um, just the idea of like programmable money was always super interesting to me.
What was the first programming language you learned?
Yeah, for me it was Python.
Hmm.
Really? It's like the early days of Python, man.
Yeah, yeah. I mean, I so not it kind of depends on how you define it, right? Like I think Python has been around since like the late 80s or 90s.
Hmm.
So like it's been around for a while, but at the time Python was like the hottest language. Like all the kind of YC startups, right, were probably writing their backends in Python.
Hmm.
And so it was like the kind of natural choice.
I remember first hearing about Python when I was studying engineering in university, and it was like I think no one was talking about Python as a programming language. In fact, in the curriculum, they were teaching C++ and VBA. Trauma, so much trauma. But
Yeah.
that's really
I,
cool.
yeah, sorry, go ahead.
I was going to ask, how did this interest into like, you said that you were always interested in computer science and you had this growing interest in programmable money that led you down this path. Like, what was that kind of journey like? Did you decide that you wanted to teach yourself a certain programming language that allowed you to start building infrastructure and programmable money in the Ethereum ecosystem, or was it a different story?
Yeah. So got into coding. Again, this is also another funny story, but one of my parents my mom's an engineer. My dad was a lawyer. And when I was young, I wanted to be a lawyer. And then he sat me down and said, it's a miserable profession. Don't do it. So then I was like, okay, I'll be an engineer, right? Like my mom. Those are like the two jobs I know. And so like that's how I kind of got into it. I think on the infrastructure side, I don't have like a great reason for why, infrastructure I'm drawn to it. Part of it is like, I've been a developer for a while. And so it's really easy for me to empathize with developers and founders and people who want to build things. And if
Mm.
have that, that sort of feeling, like, I think you definitely get drawn to infrastructure. But like, yeah, even as a kid, right? Like a lot of people wanted to make like games or things that were more consumer-y focused. Like I always kind of was interested in dev tools. And so I don't exactly know where it came from, but fortunate that that's kind of the path I fell down.
It's such a unique journey because like we love infrastructure. We invest in infrastructure companies. We love working with infrastructure companies because I think we just see all of the problems and we encounter all of the problems on a day-to-day basis. But you're right, like most people are thinking from a completely consumer focus, the products that they might use on a day-to-day basis, the entertainment value behind a game or some music platform or something. Just real quick, Carmelo's dad is a lawyer as well. Shout out Freedom Fighter. What's up, man?
Yeah, I was gonna say he used to tell me the same exact thing. He hated being a lawyer, and then he would flip flop back and forth. Like some days he'd be like, "Oh, I wish one of my kids would want to become a lawyer like their
Mm,
dad," and then the next day he'd be like, "No, it's the worst job ever. Don't ever become a lawyer." So I think that's a
yeah,
lawyer thing in general.
yeah, definitely.
The
Yeah,
ups
and
and
you mentioned you know you're a technical guy, and this is always something that piques my curiosity. But what is it like leading a company as a technical guy? Like you're essentially, I would imagine, like a CTO as well. And usually, those are some of our favorite kind of founders to invest in and work with because they understand being the face of a company, but they also understand the tech that like you're intimately involved in the technical integration and design of the roll up as a service. So what is that like? And is there any challenges for kind of wearing both those hats at the same time?
Yeah, the biggest challenge is definitely if I tried to wear both hats at the same time, that would cause problems.
Yep.
Uh, I think I'm really fortunate to have a great CTO, Parker, who I've known since literally my first day of college, who does like all the CTO things, right? Like engineering, planning, management, like architecture, right, and really like helps lead that team. And that means candidly, on the technical side, I get to do the fun stuff, right? More
Yep.
exploratory research, contributing when I can. um, I think, and this is far from a hot take, especially here where I'm based in Silicon Valley, but like I think the reasons why investors like technical founders is very real. And part of it is just like, being technical, you're able to think from like a systems perspective. You're able to like build tools to solve problems. So even if there's like a, certain automation that's needed on like the go to market side or something else, like that's something I can hop in and build.
Yeah.
And it helps so much with hiring talent. That's the biggest thing, like, evaluating talent. And I think it's really good, for people to kind of know, right? Like, on the engineering team, like both myself and my co-founder, we're strong engineers. And so like, we understand what's going on, and like, it's, we can kind of hold people to account, but we know, and we also understand if there's like a delay that comes up that's reasonable. Like, you're not going to have the classic CEO breathing down your neck being like, why can't you do this impossible thing in like 2 days? So I think generally positive all around.
Yeah, I think that's why we really resonate with technical founders. And it reminds me, I saw a funny meme the other day. I think it was like a CEO promising way too much, and then the CTO had this look of like existential horror on their face because they're like, "Slow down, don't promise that." So I think that's probably one of the biggest pain points when you don't have a CEO that knows like other parts of the company, whether it's marketing or the technical side.
Totally. Yeah. I saw that meme as well. And I think like it actually really illustrates the balance you have, you have to strike as a technical CEO, where like, sometimes you do need to just kind of set impossible goals and be like ignorant to the, how hard it is to do certain things. And so I'm trying to get better at basically just trying to, flick that like a switch on and off. I can be whoever I need to be when the company needs it.
It's great to have that self-awareness. And this is something I think Carmelo and I, we're very fortunate because we come from very different backgrounds. But in working together for a long time, there's a lot of crossover between different business focus areas. And having that intimate knowledge on either side, especially one thing that a lot of people that work at companies, especially engineers, don't realize is having some strong understanding of the business impact, the product usage and application of what they're building can really help inform how they build it or how they want to structure that infrastructure itself. And so that crossover is very, very important. I know growing up and studying engineering and working as an engineer for many years, you never get really any exposure to that. And it's a big barrier that many managers and middle managers use as an excuse to prevent engineers from moving up, is saying you need to understand business more, you need to understand finance, you need to understand this. I just want you to kind of like sit there and shut up and do your job for now. But with that being said, I wanted to ask you, like, what were some of the biggest surprises for yourself into stepping into a CEO role and then having that role grow as Caldera grew? Because you guys had recently raised, I believe, a Series A, and congratulations on that. The company is growing. Caldera is becoming more of a household name within the world of crypto infrastructure. And so, what are some of like the things that have kind of blindsided you as going down the CEO journey?
Yeah, that's a really good question.
Sorry.
The biggest thing is probably recognizing how many different kind of types of ways people can think. And this is especially true as you manage, like, it's true, of course, even within an engineering team, but as you manage more, different functions, right? Of course, every function kind of has a stereotype, and sometimes those are true, sometimes they aren't, right? But just, different people think in really different ways. Different people have different like mental models for how other people act. And so a lot of it is just kind of, and a lot of people actually, this is this was the biggest, most surprising thing for me, is like, people think of the company as a company very quickly, and people have mental models for how corporations act. And so, part of it is sometimes like, it's sort of like developing that empathy and really kind of understanding, where people are coming from, especially in, as you mentioned, right, the business side, the really in the weeds, types of things, right? Like when someone, different people will have different mental models for how they value equity or right or token warrants, etc. Different people have different models for like how they think a startup should be run, etc. And it's like learning like when to push back and be very firm, learning when to be more open minded. Um, those are definitely like some of the biggest learnings.
Yeah.
Um, I'll add maybe one other thing that was the biggest kind of, I think, 180 in terms of thesis that we've had as it relates to running the company is that we found there to be a very mixed success rate in terms of this idea of like bringing non Web3 engineers into the Web3 context and seeing if they can
Interesting.
learn. And we've all been in Web3 for some time, I imagine, and like it takes like a lot of passion to really understand how the space works, and it's something you can't really force. So if you hire someone from like a big tech background, some people get really into it, some people don't, and for some roles they don't need to get into it. But we were really strongly opinionated because we thought the space was so cool. We're like, anyone we bring in, doesn't matter where they're from, they'll also think that the space is really cool and like onboard themselves in a Web3 very quickly. And of course, like the reality is has much higher variance than that. So that was like it more concretely like one of the more surprising things.
That
That's
brings
such a
up
good note.
That's an interesting point. Is that part of the reason why you've chosen to base in SF, like in Silicon Valley? Like you have better access to like engineer and developer talent there. And also, I wanted to ask, just in general, like what's the experience like operating a Web3 or blockchain company in San Francisco? Because I don't feel like I know that many companies that are actually based there, but you probably have a different experience.
Yeah. So that was definitely that went into the calculus, but we didn't run a rigorous process when thinking about
Yeah.
where we would base the company. We both went to college in the area. My
Hmm.
co-founder and I, our early investors were all based in the Bay Area. Like we have like all of our connections are here. So it was a pretty kind of clear choice from that perspective. And it's not a choice that we've ever kind of gone back and
Yeah.
really thought very deeply about or re-examined. So, I wouldn't be surprised if SF was like the fifth or the 10th best metro for crypto companies. And, we'll just kind of live with it.
Yeah.
Um, I think, um, wait, sorry, what was the second part of that question?
No, I mean, yeah, just what the general experience was. I mean, obviously, Silicon Heavy is very traditional tech heavy, but I don't know. I mean, especially in light of the recent elections, where U.S. is probably going to start looking a lot more exciting for crypto and Web3 startups. So, what's the general sentiment there for Web3 startups in the tech industry? And also, yeah, I mean, like I think you kind of answered it, but you went to the school in the area, and obviously, Stanford is an amazing school, really well respected for develop and for Web3. It's like one of the most Web3 friendly universities in the world. So is it like an easy place to source talent? And where are you trying to find these unicorns, these people that are very talented, but also passionate and curious about Web3, and they want to drive this new industry that kind of still hasn't really been formed yet. It's still very new.
Yeah. So yeah, I mean, I think SF is not any worse than anywhere else to build a crypto company. We've never felt like we'd be better off building
Yep.
it somewhere else. The one reason why it might feel that way to some people, I think, honestly, is like you get some sort of kind of crowding out effect where like literally everyone here is working on generative AI, and depending on what type of person you are, that may or may not have an effect on your psyche. I think both my co-founder and I, we kind of enjoy being contrarian, so it honestly just makes us kind of more excited. But there is a little bit of still a social cost
Hmm.
in San Francisco. Most people are very pro crypto, but there are certainly people who think,
Hmm.
hey, maybe you're better spent working on generative AI.
Yeah.
And so that actually ties in with the other part of that question, which is like recruiting, etc. The nice thing is like because now crypto is getting hot and generative AI is getting hot, you have like nice sort of like self selection effects, which I think
Hmm.
are always good. But especially for like folks we went to college with, it was like super cycle dependent. Like you can probably still find it online. The enrollment statistics for like the main crypto class
Hmm.
on campus at the peak of the bull, it's like 800 people, right, or 600 people. And keep in mind, Stanford's a school where the class size, right, per year is
Yeah.
2,000 people, right? So 800 is like, whatever, 10% of the entire, right, student body, right? And then like when now, like, because we're in a bear market, like the teacher has actually stopped teaching the class. I think he has other things to work on, but like it got to like low double digits of enrollment, I'm fairly certain. And you could see those same patterns in the employment market. Like when crypto
Yeah.
is hot, everyone wants to work in it. When crypto wasn't so hot, um it's more self-selection. But honestly, it's like much 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 better to have those selection effects, and then if someone's like wants to work for you, like they actually care, then have a bunch of people that'll leave in 6 months. So candidly, doesn't really change too much.
Yeah, I never thought about that, but that's a really good way to measure sentiment. Like, just look at the enrollment numbers at schools like Stanford. Like, yeah,
Yeah.
yeah, you can tell when the bear market and the bull market are happening just based off those numbers. But yeah,
It's,
you brought up a good point too, because like we've seen a lot of funds raising in the last 12 months.
Mhm.
Uh, they're operating in the intersection of AI and Web3 and blockchain. So a lot of people believe that the future of generative AI is on chain. So that makes it a little bit easier, I guess, to marry these two concepts together and raise funds. But I wanted to ask one real quickly too. What was your experience like raising the Series A? Because Sasha and I, we love investing in companies that like don't have a token, or at least not yet. So I know it's a lot harder, especially in the bear market, to raise for a company that is in blockchain but doesn't have a token. It's kind of like this weird desert where nobody really knows how to invest in it.
Yeah. So we're really fortunate. We had been developing a strong relationship with Founders Fund for quite some time before we
Mhm.
did the raise, and we very quickly grew to respect how they approach the space, how they approach working with founders. Of course, they're famous for their extremely founder friendly approach, which I think is very different from a lot of Web3 funds, especially where a lot of the times the folks come from like more TradFi, right, or private equity backgrounds. And so I think we casually started speaking with Founders Fund at least 6 months before we raised, and it wasn't to raise funds. It was just to exchange ideas and talk shop, etc.
Hmm.
And then sort of over that time, by the time we decided to open up the raise, they had enough conviction in us to give us a term sheet really quickly, and we had enough conviction in them to you know to take it. And so it was a very kind of friendly process on both ends, and probably fairly atypical for a raising experience. But um, yeah, like really like a lot of just kind of slowly conviction building on both ends. And then once we formally kicked off the raise, we secured them as a lead and then filled out the rest of the round with a bunch of other amazing folks.
Yeah, I think that might be actually more typical than you think. Like it's a very organic way to raise. Like Sasha and I see this all the time too. That you kind of have this almost apathetic approach to raising. Like, yeah, I guess we could raise some money right now, and then investors suddenly have the inkling they want to throw money at you because they're like, why are these guys so confident? And they're not desperate. Like this desperate feeling when you get approached or pitched all the time. Like we get pitched all the time
Mhm.
at conferences, and you can tell right away like how much burn they have left on their roadmap. So you're like, okay, these guys really need to bring in funding this month, and you guys have the luxury of just playing it out and just growing your company and organically attracting attention. So I think that's the best way to do it.
Mhm.
Totally.
Yeah, absolutely. I think on that same note, um, there's such a strong narrative. I mean, we gauge a lot of different investment opportunities, and a team that's doing well, like they are progressing down the roadmap, and they know that they don't need the money, and they're communicating they don't need the money, but the money can maybe help speed things along. That's good, right? You don't want to hear like we've got 1 month left to live.
Mhm.
At the same time, what you said resonates with us as well because there are a few projects in our portfolio that we've invested in. and we have advised them, and we've been speaking with them and working with them for a long time. And in seeing this founder journey through 6 months, a year, 2, 3 years, you see the progress that's being made. You see how they're being fiscally responsible. They're investing that money into certain aspects of the company that are going to help them hit the next milestone, the next milestone. And so all of a sudden, you feel like, okay, I want greater exposure. I'm willing to invest more in this company. And that's
Mhm.
much less risk than maybe taking a chance on some new tech startup that you spoke to, maybe a dozen times, but you're not really sure who they are and how they do things. So it's a huge sign. I do want to pivot a bit into Caldera because we have a lot to talk about and what you guys have been doing. But before we do, I kind of missed this at the beginning of the interview. Give our listeners like a 1 minute summary on what is Caldera.
Yeah, Caldera is the easiest way to launch a rollup on Ethereum. We're a rollups as a service company. So we basically, if you're a team, you want to launch a chain, you come to us, we help you scope it out. We launch the chain for you. We run all the core infrastructure, RPCs, sequencer, etc. And suddenly, you have a chain. What used to cost millions of dollars and probably an entire team of engineers, right, is now like single digit thousands of dollars per month. We work with a bunch of awesome teams. Probably the most notable ones are Manta Network, Ape Chain, which just launched a couple weeks ago, Sanko, Kinto, like a whole bunch of others. And really the goal for us is to just scale Ethereum. We, as I said earlier on, like I came into this from just wanting to enable like really cool applications to be built, and so just like pushing the boundaries of what's actually possible with the EVM has always kind of been our North Star.
Yeah,
Beautiful.
that's fantastic. I think we've been wanting to speak with you for a while now because you guys are in such a unique position to gauge the interest, not only
Mhm.
on the infrastructure and the network side, but on the application side. And so one thing that we both actually really wanted to ask you is where is the demand coming from mostly? I'm sure you see many different types of projects that are interested in launching what we refer to as an application chain, like a network that's kind of standalone, built for their purpose, their ecosystem of applications or products, etc. But where is there one maybe that's kind of like a front runner that you're seeing more interest by as far as launching a layer 2 or layer 3 application chain like DPIN or gaming or meme coins even?
Yeah, I would say gaming, DeepIn, and maybe like certain types of dexes are all kind of roughly equal, right? Like perps dexes, yeah, deep in gaming, on the app chain context. I think the area where we're seeing the most interest right now, we kind of call them like ecosystem chains. And obviously that's a spectrum. Like you mentioned meme coins, like that's a good example where, you're launching a chain ostensibly for a meme coin, but you also want dexes to come to that chain. You want some community, maybe some gaming. Like it's sort of like 50-50 in between like a general purpose chain and an app specific chain. And we're seeing a lot of teams really do great work like in that category, right? I would say like Ape Chain is one of them, where they obviously have ApeCoin. They have like the games that are being built by Yuga, which I think are going to go live, in some form on the chain, and they have all this other UGC stuff. But it's also a general purpose chain, and it's had like a huge kind of organic like meme coin scene that very quickly developed on it. Sort of like pumped up fun style things. And so
Mm.
like we think the kind of the most interesting part of blockchains is that they allow for like emergent behavior. And so really what we see with a lot of the folks who are trying to launch their own chains as well, they might have an application and they're kind of trying to nudge it in the direction of being an ecosystem. They like have some protocol they know users want to use. Maybe it's launching tokens or creating NFTs, etc., that the community finds valuable, and then they want to take that, put it on its own chain, and then like attract other developers to build onto. And so we're really seeing the line between app chain and like general purpose chain blur. And like that sort of area is what we're most excited about right now.
Mm.
That being said, there are a lot of like pure app chains, right? Where we have a game, we expect to have millions of users, we need maximum scale that we talk to, and like we're happy to work with those teams as well.
Do you think? I don't think it's happening yet, but you think there's going to be more enterprise rollups, like enterprise blockchains that are more private? They're not meant for public consumption, but they just, you want to use blockchain infrastructure to maybe share data or resources or even money in a private network. Do you think that's going to be in demand in the next few years? And you guys are obviously going to be primed to handle that, if so.
Yeah, I say almost certainly yes. We've had preliminary conversations with really really big enterprises,
Oh,
and again, I think it'll take some time. It's not, I'm not going to say it's imminent, it's going to happen in like the next 6 months, but it's something, at some of the biggest companies in the world, right? People are actually thinking about
yeah.
doing this. And when they think about doing it, they actually, the teams within these companies, they're super smart, they're very plugged in. They know that a roll up is going to be the optimal way to do it, versus like trying to launch your entire like POA side chain or whatever that's
Hmm.
totally disconnected from everything and costs a ton of money to run. And so I would really not be surprised if we saw like massive enterprises start launching rollups on Ethereum pretty soon.
That is very exciting, especially for Ethereum holders that are probably wondering right now why the price is not correlating with Bitcoin all-time high. But
Yeah.
yeah, I wanted to ask also because like it's a little bit. I mean, you guys are like a software company. You make it easier for anybody to launch a blockchain. But what else does Caldera do to support? Like you mentioned, it's kind of hard to operate a chain if you don't have anybody else doing anything on it. So you need to obviously help maybe establish a DEX somewhere to trade tokens if there are tokens on that chain. And traditionally we've seen blockchains kind of fall on their faces if they don't have incentives to build on their network, and that might not be the future. Like if you have smaller app chains with less building on it, maybe people can easily launch their own coins or meme coins or whatever, and you have stable coins, you have the native asset and everything. But what else is needed besides like spinning up the roll up and then supporting them? Like what other elements do you need for a roll up these days?
Yeah, third party infrastructure is the biggest thing. And when I say that, I'm just referring to like bridges,
Yeah,
oracles,
yeah.
dexes, as you mentioned. That's the area where we're very focused on. Like we
Okay.
recognize, you spin up a chain, like weirdly enough, actually, RAS has become so popular and so hot. And like, I think the companies in this space are all high enough quality where like it's become easier to launch an entire chain than
Hmm.
like get an oracle like deployed on that chain, or like get a good bridge deployed to that
Yeah.
chain. And so we view that as kind of like the next frontier for ourselves, right? And like part of that is like a business question,
Hmm.
making sure we have the right relationships and we know how to work with the best teams in all these spaces. And then part of it's a technical question, where like we're building solutions internally to try to connect all of our chains and make it easier for third party infrastructure providers to connect to our chains. And so the kind of combination of both those things will hopefully make it a lot easier, not only to spin up a chain, but to have a chain that like has
Yeah.
all the infrastructure that users and developers, et cetera, have come to expect. And then on that front, another thing that we try to be as helpful as possible in is the kind of chain go to market. And it's
Hmm.
one of the reasons why we've done our best to cultivate like an organic retail crypto end user following, of like early adopters who just want to like try new things. Like obviously when you launch something new, as you mentioned, right, a lot of teams, they have to turn to incentives to get people to go on board, and we're fortunate enough to have like a really awesome community that obviously it's crypto, right? So people are trying new things, right? Some of them are farmers, some of them are genuinely interested
Yeah.
in what's being built. But like regardless, we can direct them to the teams we work with and help them get their first like 10,000 right on
Mm.
chain users, 100,000 on chain users, and so that's also something that we're really focused on at the company, and I think especially a lot of our like smaller to medium sized customers like really appreciate it.
Mm.
Yes, especially with this like fragmentation of liquidity. Like I know traditionally in the past, when clients or portfolio companies have asked for guidance on which chain to launch, usually the first thing you mention in that conversation is how close are you to liquidity? And
Hmm.
being on Ethereum, we used to launch projects on Ethereum, and now we're launching them on layer twos and even layer threes sometimes, or making our own layer threes. So what is it like? Is that a problem? Because I saw you guys mention that you have like $650 million of TVL and all the networks, all the chains you've helped spin up. So how easy is it to move liquidity across all these chains and interoperate with one another and with their layer twos and layer ones beneath them?
Yeah. So right now in our ecosystem, it kind of depends from where to where,
Hmm.
right? The more popular chains have, I think, quite a few routes.
Yeah.
We work closely with Layer Zero. We work closely with Hyperlane. So you kind of have what you have, in the Ethereum ecosystem as a whole. It's just like kind of like a hodgepodge of interop solutions that works okay. We think we're in a really good position ourselves to start building like our own solutions internally that can at least connect like our own the rollups we're running and kind of take advantage of the fact that we have like a direct view into the sequencer for all those chains. So we'll be able to offer that as basically an additional kind of option on top of all these other amazing options that exist in the space for liquidity. It is definitely, I think, like outside of the third party infra stuff that I mentioned before, that is like the biggest problem. When you go to a conference, it's all anyone talks about, right? Like fragmentation on Ethereum. And it's definitely true. And like for us as the company that some would say is contributing to that problem, like we also want to contribute to the solution.
Yeah.
So like I think just like anything else in this space, like we'll build our way out of it. But it definitely is like a real thing that needs to be addressed.
Yeah, I
Hmm.
think we're getting closer to it, but that's very encouraging to hear. I like build our way out of it. That's a good slogan too.
Mhm.
This kind of leads me to a question I've been dying to ask you, Matt, and it goes back to what you had said before about the prevalence of enterprise solutions with rollups. I love this, and something that Carmelo and I discuss often, and we realize that this is really what the future looks like with blockchain technology. We don't consider like crypto or blockchain a product. We think of it as an infrastructure, and we've used this analogy before talking about how it's kind of like cable internet replaced DSL, right? And so all of a sudden you have this infrastructure that can help make your business, like Microsoft or Google or whoever, make your business internally run much more efficiently, much better, more reliable transmission of data, etc. And if you think of the enterprise side as like the private sector, a lot of what we've been doing with Caldera might be considered the public sector. And XR1 is a great example. I think that was how we had met both James and Parker. Shout out those guys. They're awesome, by the way. But they're working on this incredible gaming infrastructure blockchain for all of the different IP that they're launching across several different gaming studios, and the node network that they're launching that we helped design as far as the economics and the sales structure. Is meant to go directly to consumers, this public sector kind of use case, right? And that's amazing if all of it makes sense, like in that case. But there are so many other networks that are being launched, like L2 or L3 or application chain ecosystem chains that are being launched through a lot of different RAS providers. And do you feel like this is kind of, like you mentioned, fragmenting liquidity, but do you feel like it's kind of diluting attention from a product or consumer perspective? And if so, do you believe that there might be a consolidation in the future?
I think at the margins, you could say it's diluting attention. I think the most important thing is to have killer apps, right?
Mhm.
Like Polymarket is a great example, right? As a
Yep.
killer app just for crypto. Like no one cares that there are, thousands of failed projects in crypto doing all sorts of different things. Like the world now, like when they think crypto, one of the things they think about is Polymarket. And
Mhm.
they understand that like crypto is able to facilitate that in a really unique way. And so I think for us, we view it if we're thinking from the perspective of like a neutral sort of steward of the space. It's important to be really honest, um, that like with ourselves when a project is working and when a project isn't working. But it's kind of like shots on goal. Like prediction markets were not candidly very successful in the crypto space They're one of like the earliest, things in the Ethereum landscape that were like proposed. There are many versions, and it's taken, right, like the better part of a decade for them to really come into form. A lot of the newer projects now might take a similar amount of time. As a company, we try our best to be unopinionated and open-minded, with teams. We found that's been super helpful. It's one of the reasons why we were like the earliest adopter of alt DA networks like Celestia, even when everyone was saying, it doesn't make sense, be ETH aligned instead, wait for blobs, etc. Because like, we try to come into the space from like an egoless perspective, and understand that like projects and their users probably know more than we do about their own projects and their own communities. Um, so, you know, I view all this experimentation as a very positive thing. But again, with the caveat, it needs to get us to real applications
Yeah.
at some that people are using and are interested in. And then if that happens, like we'll forget all the rest.
Absolutely. I think this is maybe the most important point, right? People forget that infrastructure exists to allow things to be built. So the applications are the most important thing. We need to make sure that we have applications being built on this infrastructure that can bring value to people, that are improving lives in some form or providing some entertainment value. And like you mentioned, Polymarket, it's funny because that was kind of like my single source of truth for the US presidential election
Yeah.
over the past couple of weeks, right? I'm just like going there and measuring sentiment because it's such a great aggregate. But yeah, I do believe that, there will be a consolidation eventually. And I think that consolidation may come towards applications on networks like Polymarket, where a lot of the liquidity is, where a lot of the attention is. Do you see any other applications or ecosystems that stand out kind of like that might be these like totem poles?
Yeah, meme coins right now are really
Oh,
interesting.
hot
Um,
take.
yeah, yeah. I think there's like real, like the real totem poles are the things that draw in new users, and we don't always as a space get to choose what those things are, right? But meme coins are legitimately one of them. And so like I think we should, like we as a company, we watch that space with a lot of interest. We work with a lot of teams that are trying to encourage meme coin ecosystems and are really excited about that sort of thing. Prediction markets, and then I do really think that gaming is going to have its time in Web3. Obviously,
Yes.
development cycles are a lot longer to build really good games than almost any other type of software product. But it just makes so much sense, and that's not always true with products in Web3. But like, gaming in Web3, it'll happen. I think people just need to understand why they're so good together, and we need a little bit of like creative destruction and disruption in the gaming space, like new upstart studios that really use crypto to fuel their GTM. But it'll happen. Someone will figure it out.
Yeah.
Absolutely. Yeah, I like seeing some of these smaller, more adventurous studios because you can't really innovate so much if you're a big publicly traded company. But these smaller, hungry studios with just a few devs, and they're really getting experimental with the way they integrate Web3, and it's really exciting. You still see a lot of people that are saying, "Oh, well, this just makes the experience for gamers worse, and there's no actual value added." But where I think we saw like Gunzilla.
Mm.
And Off the Grid was like one of the first games that kind of crossed over into the mainstream and maybe woke people up a little bit to the potential of Web3 gaming, which I tend to agree. I don't think we're quite there yet, but it's going to be exciting for sure. And then, yeah, we're wondering if we're going to see like every gaming studio having its own app chain. So that's obviously another potential client. Like you said, gaming is pretty big for you guys, and it probably will be even bigger in the future.
Totally. I think in the far future, not only will every studio have its own chain, but every game will have multiple
Wow.
chains. Like just like how games have like many different servers. Like can't imagine how many servers there are that are running like League of Legends games like throughout the world, right?
Yeah,
It'll be the same thing with app chains.
I didn't even think of that, but that's interesting to yeah, compare it to servers. Like, yeah, I think like an MMO has what, like 1,000 servers, or like,
Mhm.
different territories, and it covers different parts of the world and different types of players. So that's even crazy. That's really bullish for you guys.
Yeah.
And you reminded me of something too. Like you are obviously heavy betting on Ethereum, and it makes sense because a lot of these other networks, they're not as decentralized, but they, they're faster, they have higher throughput and everything. So Ethereum needs horizontal scaling. But is there any other ecosystems you guys have been eyeing? Like I know you're working heavily with Arbitrum, Optimism, ZK, but have you guys ever thought to build rollups on Bitcoin, for example? Because we saw it earlier this year, and it might come back, but Bitcoin layer twos might hit their second wave and become really popular again.
Yeah, we are eyeing that space with a lot of interest.
Hmm.
Solana as well. The Telegram ecosystem is really interesting to us.
Yeah.
To be honest, we're kind of in wait and see mode for a lot of these.
Yep.
And that doesn't necessarily mean that these ecosystems won't be successful. But from our view, like an ecosystem needs very specific properties in order for us to enter it.
Mm-hmm.
And one of those is like kind of organic interest in new chains that are trying to do something other than tech for differentiation. Right. So in the Bitcoin space, I'm really fascinated by a lot of the innovation that's happening there. It reminds me of Ethereum rollups 3 years ago, where everyone's trying to create a general purpose, the biggest thing, the rollup, and they raise a bunch of money, they build out, like really unique tooling, and they're all kind of like fighting for that same thing, right? Like they're not like a natural customer of ours because they actually need to do a lot of custom development. We're not really well suited to serve them. But again, like yeah, once we have a lot of teams that are like, we really want to build our game on top of Bitcoin and we need 1,000 like that'll be when we enter that market. And so we just want to make sure that it's a timing thing for us. But again, if the space continues to progress as it has been progressing, I think it's just a matter of time.
Yeah, it's interesting you mentioned Solana too. Like, I never considered that, but do you think Solana will start to have its own layer twos? And I mean, it's already got really high throughput and a lot of transactions per second, but there's obviously other reasons why you might want to have your own chain on top of Solana if you really believe in that ecosystem too.
Yeah, from my understanding, people in the community are experimenting with it. And then of course there's kind of the inverse thing of like Solana on Ethereum. I'm an investor in a company called Soon, which is doing this that I'm a huge fan of. The thing is I think everyone recognizes that space is again not yet ready for app chains. It's just like part of it is a testament to how scalable the VM is, less like need for app for scaling. And then as well, I think a lot of those communities are just not really used to there being multiple chains. Like Solana, wallets, they don't really have like how MetaMask has, right? Like an add new network, button. Like a lot of this tooling will actually need to be updated for like a multi Solana VM chain world. And again, like now is not the right time for us to enter that, but it could be a matter of months when we decide to pull the trigger.
Oh wow!
Oh, short.
Interesting.
Didn't
Yeah, I
expect
think
that.
not at all. I think maybe one of the bigger drivers, like Solana, like you said, the throughput, the transaction efficiency, and the cost is already so attractive. So maybe one of the drivers in building rollups on top of that network might be for enterprise solutions with like privacy protocols, because you don't really need like that kind of scalability there yet. But I think we're coming to a close, unfortunately. But Matt, I do want to ask you another question. You guys are in such a peculiar position, like I mentioned, to be gauging the industry. You've got insights into the scaling and the demand behind virtually every major network, and you're working with incredible projects that are focused on building ecosystems and actually building products that cater towards users. And I know you guys just raised or finished raising your Series A earlier this year. And I know Carmelo actually loves asking this question. I'm kind of stealing his thunder. When token is kind of a meme that many people throw around here. Does Caldera have any plans on launching a token? And if so, what does that look like?
Yeah, if you ask this question every episode, I'm sure you make a lot of lawyers very, angry. I think that for us, the sort of the cryptic, but very real answer for how we think about tokens is like we see them as like a very valuable way to decentralize networks and to to solve coordination problems. I think like the like our, what we do and the protocols that get built might call for that at some point in time. I don't have any explicit plans to share today.
Understood. That is such a perfect answer, though, right? Because there's so many teams that we talk to that are launching a token, and the current business model that they're running, it just doesn't seem like it can add any benefit to it. But the idea of decentralizing the protocol or decentralizing any aspects of Caldera in the future, that could be very exciting. And so thanks so much for that. We got one more segment that we end every interview with, and I'm going to hand it off to Carmelo. But before we do, I just want to remind everybody, thank you so much for watching. If you're liking this content, smash that like button, tap it, do whatever you do to that like button, and throw us a subscribe, because we've got many more fun interviews coming. And make sure you check out links in the show notes. You can find everything about Matt and Caldera there below. And Matt, thank you so much for coming on. And without further ado, Carmelo, take it away, man.
Yeah, I think I want to switch it up a little bit today and do something a little bit more fun. So usually we say, what are you most bullish on in the next, let's say, 12 months? It can be anything except for your own company. And the part two to that question, which I'm actually more interested in hearing from you, especially, is making a bull case for Ethereum, because like you probably like Ethereum as much as I do, if not more. So why do you think Ethereum's kind of lagging behind, and what do you think the bull case is for Ethereum in the next 12 months? And what are you most excited about in the next 12 months? It could be anything: people, companies, tokens, meme coins, doesn't matter.
Yeah, the bull case on Ethereum is, and this again is super relevant to our company. I gave a talk on this in Singapore earlier this year. But the bull case for Ethereum is just it's now been the place where things happen.
Mm-hmm.
I don't think people, like when Ethereum was at all-time highs and everything was super expensive, people didn't realize like people were leaving Ethereum en masse, like the real builders, because they were totally priced out. Like a single NFT mint could destroy your business, right? Like now like Ethereum, everything's happening on Ethereum, either on L1 or L2s or L3s. Obviously, there are people who say, well, we wish it could all be on L1. That would, pump our bags. I don't think that's a realistic counterfactual, right? We're in a much better place. We're in basically as good a place as Ethereum could be, given the realities of the market. And one of the surprising things for me in running this company, we do have teams that want to use custom gas tokens. They still, use ETH as money, right? ETH is the moneyness thing is very real. And like, it's sort of like the US dollar to me. Like all these chains, they're all using ETH in some form. Maybe they're not paying massive amounts in fees, but they're just constantly adding more and more utility to Ethereum as like the de facto kind of, universal currency of all of these chains. And like, that is going to continue like potentially like forever, right? Even if we continue on this like slightly fragmented scaling roadmap. Very quickly, I'll also mention one thing in the space I'm really bullish on. Like there's a certain category of new applications coming out, either via ZK or via TEEs, like trusted execution environments, that are connecting very tightly and in both directions Web 2 applications to Web 3. Like you can now put your like Twitter account in a TEE, mint an NFT that gives people the right to like tweet from your Twitter account. Whoa. And like that can all happen on chain and trustlessly. Like that is huge, massive kind of like opening for a lot of new kind of things to evolve and ways to take like Web3 governments, like innovations like DAOs, right? You could apply them now to a big hedge fund that's trading on like the NASDAQ or something. And so this is like very, very under discussed because it's only happening, with like there's probably like 25 people in the world working on this right now. But like I think it has the potential to really, really change like what gets done in Web3.
Mm-hmm. Yeah,
and the potential with AI agents actually behind that as well.
I was going to say that.
Yeah. Yeah, and you can run those in a TE as well, so you can prove them again, right? Like both ways.
God,
But
you
yeah,
didn't say meme coins. It's usually meme coins for some reason. Oh man. But anyways, Matt, thank you so much for coming on. It's been a pleasure meeting you finally and speaking with you. Really love this conversation. And yeah, let our guys know where can they find you and what's the latest happening with Caldera.
yeah. First of all, thank you guys for having me on. This is a lot of fun, and likewise, good to meet you guys finally. The best way, follow us on X. I'm x.com/0xkatz KATZ, and the company is simply Caldera XYZ. No spaces, no underscore, anything.
Yeah, I see you're
Fantastic.
great. You guys have a really funny marketing on Twitter.
Mhm. We do our best.
So yeah, follow these guys for sure.
One of the voices of reason. Matt, thanks again, and thanks to everyone for tuning in this episode. I hope you guys enjoyed it. Again, give us a like, throw us a subscribe, and we'll see you next time. Until then, stay safe out there, y'all. Ciao.